What's going on, you guys, and welcome back to another video. If you are new to the channel here, my name is Brandon. I recently got a suggestion from one of the viewers that I should do a quick series every month talking about the stocks on my personal radar, stocks that I've been nibbling at, stocks that I'm liking at the moment. I'm gonna do my best to keep this series short and concise and just try to point you guys in the right direction. I know my videos can go on for 30-40 minutes and nobody wants to see that. For those that have been following along with the markets over the past couple of weeks, you've known that they've started to get a little bit shaky, and this is something that I really like to see because we're finally getting presented with some opportunities that we really haven't seen over the past number of months. So let's dive on into my picks today, guys. Let me know what you think of them down below, and also leave a comment with what stocks you guys are watching on your personal watch list. If you guys enjoy this video, please take a moment and drop a quick thumbs up. And as always, as a reminder, we do have our Investing Academy, which is the first link in the description below. But stock number one that we're going to be covering today is the company Activision Blizzard, ticker ATVI. And these shares are actually down 25% off of their highs. For those that haven't been following the channel or are not up to speed with this company, this is one of the largest video game producers in the world. This company is also huge in the mobile gaming space, and just in general, the gaming field is a field where I see a lot of growth potential coming over the coming years. Activision Blizzard has had some backlash over the previous year with just some things that are going on within the corporation. That's something that you'll have to dig into deeper to assess whether it's a right stock for you or not. But coming up this next November, they have a big Call of Duty launch. These are always a hit. They will continue to drive in-game purchases, continue to drive revenue for the business. I actually added some more shares of this stock quite recently. Today, the shares trade at $77.29. Based on Morningstar's calculation, they see them trading today at a 21% discount. Stock number two on October's watch list is a Canadian stock, and it's the company Rogers Communications. The ticker for Rogers is RCI.B.TO. These are, of course, the Class B shares that we're looking at. The dividend today sits at 3.41%, so a nicer yield compared to Activision Blizzard. This stock has as well been on a slower pullback since about late 2018. Taking a look over to Yahoo Finance, this stock is trading towards the lower part of their 52-week range. I have highlighted here the price to earnings multiple of 18. When we compare this amongst the industry peers, such as a company like TELUS, trading at a 28 PE, if you were to make an apples to apples comparison, this stock does look relatively cheaper. As I've talked about before on the channel, the payout ratio as well, I do put in favor of Rogers. Today, they're sitting at a payout ratio of 62%, which is actually much lower than the industry average, much more of a secure dividend you could look at if this is important to you. If we compare this to, again, a TELUS, again, not to bash TELUS, but they do sit at a payout ratio of currently 131%. Both companies are ones that I'd consider great long-term holds, but at this given point, Rogers is the one that's on my list. The shares today trade at $58.61. Number three on my list is the company British American Tobacco, ticker BTI. This one sits today with the 8.6% dividend. This is, of course, one of the largest tobacco companies in the world. You can again make the assessment of whether this is an appropriate company for you. We actually just recently added this stock to our dividend portfolio on the Wealthsimple portfolio that we're building up for you guys. So we are going to have a much more in-depth breakdown of that in our upcoming review. If you're not already subscribed to the channel, make sure you're subscribed so that when that does go live, you can learn all about the company. But in general, this is a company that, although hasn't been performing extremely well, it is what I would consider a bellwether stock in a non-cyclical industry. If this volatility in the market that we're seeing continues over the next couple of months, I think that this stock has already seen a bit of its downfall baked in. The stock is already cheaply priced in my opinion, and I think that this could serve as a great recovery play, as well as, of course, a very, very juicy dividend. The shares today trade at $34.57 USD, and again, we're looking at an 8% plus dividend. Number four on my list is the company FedEx. Ticker here is FDX. The dividend is much smaller at 1.36%, but FedEx has fallen off a bit of a cliff. These shares are down close to 30% as of the time of this filming. This is, of course, the largest express package provider out there. FedEx is a staple in any economy, and I think that they should, of course, benefit from the upcoming quarter. This is typically the most busy time for the year for these types of companies. FedEx is a company that has historically weathered all types of business cycles, and I actually feel that this pullback is rather healthy and normal and to be expected with the company. For those not familiar, a few years back, FedEx acquired a company called Dutch, which strengthened their position in Europe. Keep in mind, although we're here in North America, this company is shipping packages all across the globe. Shares have been quite volatile over the past few years, as you can see, and just a couple of years ago, they dropped somewhere in the range of 70 to 80%, so that is something to be expected based on the previous performance. I don't know if we've quite found a bottom yet, but nevertheless, it has got onto my watch list. This is a quality business that I have no issue with going forward. The shares today trade at $221 USD. Stock number 5, we are bouncing back to the Canadian market. I know you guys want more Canadian picks, so I'll squeeze them in where I can, but it is the company Manulife Financial. Ticker here is MFC.TO, and you got a really nice starting yield of 4.60%. This to me is an easy choice for some reliable dividend income. Manulife is of course one of Canada's largest insurance providers, one of the big 3, but as well they have exposure across the globe, in particular areas like Europe and Asia. The stock hasn't necessarily done much in terms of growth. Obviously, if you're buying at more opportune times, you do see the capital appreciation. But for me, the name of the game here is the dividend. The dividend has been growing for 7 years, and most importantly, compounding at a very nice rate of 10% over that 5-year period. The company currently pays out about 30% of their earnings, so I see nothing to worry about here. This is a great stock to consider if you are a passive income investor or if you're someone that wants to put the priority on dividends. I would keep adding to this stock as time goes. Here in October, shares trading at $25.35. It is as well on my watch list. Number 6, it's the company Alibaba, ticker BABA. This one does not pay a dividend. This is what we would consider a growth stock. Shares, of course, as we all know, are struggling to find a bottom. I have done multiple videos of my thoughts on both Alibaba, Tencent, and really the broader Chinese market. If you would like to take a moment and check out those videos, I'd highly recommend that you do. I've also talked about on the channel how this is one of my personal biggest bets that I have going in the stock market, one of the larger positions in my portfolio, and although shares are down, my conviction there has not changed. This is a rapidly growing business with global reach and in my opinion is significantly underpriced. For those that do follow along with the industry, it was just announced that Charlie Munger just nearly doubled down on his Alibaba position just in the last quarter, boosting his stake by 83%. I think that the Chinese market is widely misunderstood and it's up to you to make the decision whether this is an appropriate stock for you. But if you do have the guts to take a little nibble, take a little stab at these stocks, I do think that we're getting really tremendous prices for the long haul. Shares today trade at $144 USD. Last but not least for our watch list in October, it's the company Visa. Ticker is V, and as I talked about in my last video, shares are down about 10%, and you really don't get these opportunities all too often. I'm not gonna go in depth by any means in this video because again, I just dedicated an entire video to that if you do wanna go check that out. But Visa is a stock that I'm very much liking in the moment, one of my core positions, and it's one that finally is back on the watch list, back on the radar for a time to nibble. Shares of Visa today trade at $223.57 USD. But hey guys, let me know what you think of these quick hitter videos. I'm doing my best to keep these videos as short as possible, but still at least point you guys in the right direction or at least showcase what areas of the market I'm personally looking for. As always, do your own research and due diligence when it comes to adding stocks to your portfolio. But if you did enjoy this video, I'd really appreciate it if you gave a thumbs up and let me know what you think about this new series down in the comment section below. If you're not already subscribed to the channel, we post videos like this every single week, so make sure you're subscribed and hit the bell for notifications. And of course, if you're new to the stock market, you need some additional help, you need some training, or someone to walk you through the process of getting started with the stock market, you can learn all about our Investing Academy, which is that first link down in the description below. As always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.